This morning, I woke up $12,000 richer. And no, this is not some fake guru clickbait video. This is real. And this overnight strategy that I've been quietly using behind the scenes to print while the world sleeps is better than you could ever imagine. What I'm about to walk you through is exactly how I've been using gold overnight to make thousands of dollars while I'm sleeping. At the time of this recording, market has not even opened yet, and my day is done. Think about all the opportunities and time you would present yourself if you picked up something like this, and best part is, I didn't do shit. I suggest you take this serious because this is my strategy. Make sure to like and subscribe, and make sure to use code Steph at Alpha Futures for 20% off any funded accounts. You're only gonna need one after this video. Let me show you why learning something like this, using something like this, is so important. Last night, it was Sunday. I looked at Forex Factory like I usually do to get my kind of weekly outlook on the news going forward, and I realized, oh my gosh, a no news Monday is something I really have been going against of recent. I cannot trade on these low volume bad Mondays. So my plan was Sunday night to get in a trade, hopefully off the higher time frame like I usually do, and look for an overnight swing to catch a nice win so that I can take Monday off and go into Tuesday with profits. More profits than I usually would have expected, and not have to worry about it. So obviously last night I alerted I was jumping in longs. I was just willing to try them, and this was the big factor. And this is the biggest thing you're gonna learn from this, and it's just so like sick to think about. Very bearish high time frame on the dollar index. Really bullish on gold currently. Would love to get up on this and let it roll. There is nothing better than getting up on a trade, going to bed, waking up to a bag. And no, this is not something that I just started to do. I've had huge profit days, 24,000, 16,000, multiple times over using this strategy. It's not something I like to use all the time because I definitely risk more than I should. But when it presents itself, I want to make sure you know exactly what to do so you can get on these huge gains. I mean, I made 17 points, 18 points on this trade. That was more than I made all of last week. So theoretically, week's off to a pretty good start. But again, first off, I just want to say what's up. This might be the first time you're watching this video. Hopefully you guys are enjoying it. I'm going to walk you through how I do this step by step. We're going to go deep into how I use the dollar index to form a bias, how I line that up with higher time frame gold setups, and how I execute these trades to make me money while I literally sleep. This whole trade started with one thing. If you're trading gold and you're not watching the dollar index, you're basically trading blind. And if you're new to trading gold and you just saw me make that switch from trading NQ to now gold full time, go check out my last video. I tell you why I did it, how I do it, and my day trading strategy, just to give you guys a better, clear, more persistent way to do this. Once again, I don't want this to be your main thing, but it is great sometimes just, you don't get those big duffs. So this is the dollar, and let's just get one thing clear. There's something that you're going to learn, that the dollar moves basically completely opposite to whatever gold is doing. Think about it from this perspective, and I just found this out and it really clicks for me. Gold futures measure 100 troy ounces, I believe, of gold. So when you're seeing it move, it's not changing the amount of gold, it's changing the price of it. Think about it from this perspective. If the price of the dollar is going down, it's going to take more dollars than it was prior to purchase the same amount of gold. And same thing if it's going up. If the value of the dollar has climbed, it's going to take less dollars. It might be a little bit, but still it'll have a big impact. It's going to take less dollars than it prior was to buy 100 troy ounces of gold. Let's run that by one more time. With the dollar's current value right here, let's just say you can buy X amount of gold with that amount of money. Now let's just say the price of the dollar falls all the way back down to this area. Inherently, it's going to take more dollars than it would up here to buy the same amount of gold, increasing the price of gold. So that's why it's extremely important, and you pretty much have to base your trades off of what the dollar is doing because it has a ginormous impact on what is going to be happening going forward. So this was last night, and what do I notice here that really makes me have a bearish bias on gold? On the 4 hour, there's nothing crazy. We are having this bearish consolidation here, which isn't a big factor for me, but usually in a scenario like this where I don't really have a clear bias on the 4 hour, we'll go down on the 1 hour and get a more current bias to trade with. So that's what I did, and the first thing I always do, regardless of what the chart is I look at the current price of whatever, and I'll find the recent high and I'll find the recent low. The reason why this is not the most recent low for me is because it's not enough of a pivot. You always want to have your zones kind of be in the V shape kind of formation. You want your zone to be right where the kind of lines to meet up. Right here, for example, we have that V. Right here, for example, we have that V. Right here, it's not horrible, but it's just not enough for me just to mark it out. Noticing our high and our low, we do see there is a big opportunity for this to continue back down. Trend has been bullish, but as long as we are underneath this high, I still technically should be looking for shorts in this area on gold. What do we notice here? Price continues to buy up. We hit this area, we make a decent candle, then we engulf to the short side off of the supply zone. This is a big sign for me. This proves sellers are in this area. We wanted to see them happen. We wanted to see them come in. They did. Not only did they do so, but they engulfed the previous candle. What an engulfing candle is when you have the close and the open of that candle basically above the open and close of this candle. It's basically showing that there is a pretty big imbalance of sellers compared to buyers currently in this area. A really good sign for shorts. Another thing I really like about this that gives me even more hope for a short-sided play is that you see all the wicks we had in this area, a lot of selling coming into play, big sellers in this area, and this big momentum we had all of a sudden starts to get smaller and smaller and slow down a lot in this big supply zone. So now that we've seen this, right when this candle closed, I had a super bullish opportunity set up, leaning to the bullish side on gold, because once again, if I'm predicting the dollar to fall, the price of gold should increase. And guys, I don't want to spoil it, but so boom, we jump to gold, and what do we notice? Looking high time frame, we are technically bullish, but we've had this pretty strong downtrend of recent with this really big high right in front of us. Now that we have in the back of the mind that the dollar should be coming down tonight based off of our conviction, we now need to look at the opportunity of longs being presented on gold. If they are really plausible, we need to start back at where the first opportunity for a bullish setup presented itself. Boom. This is where buyers really took over, and of recent we've been kind of in this very bullish uptrend. What do we see here? We see big pop up, we see retracement, we see big pop up. Following this one, retracement. What happened the last two times that we retraced? Big pop up. I've always believed that the market is repeating itself consistently. The law of repetition inside of the trading space is always evident. When something happens once or twice, it's very likely that it'll happen for a third time. So when you see something like this, where we come in with this very big initial buy up, we see that buyers finally establish themselves. Sellers do start to consolidate, nothing too crazy, followed by a really strong push up in one direction. Now, very similar to this first candle, right? Wouldn't you agree that this candle right here, very similar to this one? And what is also very similar, how ironic that these both look extremely similar within each other. So we're seeing this kind of staircase system, very, very common within higher time frame stuff. The problem is a lot of day traders just get caught up in this area where they're chasing longs and they just get stopped out. They get consolidated on. They just cannot find that breakout. And I'm starting to notice what's going on here. This is a pretty good opportunity to do what? Breakout, like we've continued to do on the higher time frame ever since we started this new trend. Now that we've been looking at the 4-hour on gold, I'm seeing an opportunity that's presenting itself to size into long. We're in an uptrend. There's clean higher lows. We're seeing clean repetition on the higher time frame. All I'm looking for is a slight pullback, a jump in opportunity. This is where the real power of a day trading strategy comes into play. I'm not just trading random levels. I'm aligning DXY's macro bias with the high time frame structure on gold. Align that with some good key price action and you're going to be killing it. And this was my initial entry. This was crazy. So I called this out in the Discord. Obviously, you guys saw that already. I saw that we were trending up pretty nicely on gold. We finally broke out of this short-sided consolidation. I'm looking for an entry off this EMA on the 15-minute. That's all I was doing. Price comes down. We tap that EMA. I alert the trade. I get in at 0.7. And dude, it came right back up. Off rip, I was like, oh, this is going to be good. Once again, this was something just as simple as knowing that the dollar looked weak. There was an opportunity for the dollar to go down and gold looked strong. There's an opportunity for gold to go up. Those work hand in hand together. I had a clean entry off my EMA. I waited for a retracement and I got in. Now, of course, regardless of the position size that you had, you would have made a lot of money on this. 17 points on gold is insane, but I do use around 7 to 8 minis per trade. That's just something that I like to do. I don't recommend that for everybody, but this trade would have hands down passed any funded account you had or any opportunity you would have had to make any sort of money. This would have been insane. This would have been higher than, this probably would have been your best day ever. This is the sticky situation with this current entry. I did not have a stop loss. When I alerted that trade in the Discord, I didn't give them a stop loss, and that obviously could result in some problems. So what I did in a situation like this, knowing that the actual area where I should be having my stop loss 100% is at this low. This is the only low we can trade off of that we believe. Once again, we're looking for those V's. You see this VA right here. We want to enter and exit, and you really use and target these areas right here. These big pivot points is right there. Problem is, that's a 10-point stop loss. That is pretty dangerous. When you look big picture and see that we got 18, 10 doesn't sound too bad to risk, but I didn't want to start my week off down 10 points on gold. Rule of thumb for me is really at least 5 points on a trade like this. You have to give it room. You have to understand especially while you're sleeping, big time frame. We saw those areas where we saw that big shoot up, and then that consolidation sideways, it can wick a lot of people out. It can get a lot of people uncomfortable. You need to make sure your chart and your entry has room to breathe. So making sure you have at least a 5-point SL, that was kind of my risk going into it. I wanted to risk 5 points, and I literally put, this was crazy. I put an alert out. I was like, I'm just going to risk 5 points. We were in drawdown, and that was the last time we were in drawdown. So boom, we obviously bottom ticked, and then it's got a little sticky. We came up, boom, right there was the problem. Oh my gosh. It was 12 o'clock. I was tired. We were in drawdown, down around 3 points, and I alerted this. I said, down 3 points, just gonna set a 5-point SL and see if some buys can pick us up. At that point, I set my stop. I went to bed. I felt confident. I saw that we got back up to break even before I fell asleep, and then I woke up. And my first thing I noticed when I woke up, especially when I do this at night, I have notifications on my phone whenever I get order fills on Robinhood, and I didn't get an order filled. So that was like, I was like, at that point I knew, I was like, all right, bro, I'm gonna be up a lot of money because my stop loss didn't get filled. You don't set a take profit with a strategy like this. It's very risky for the most part, but you have to open yourself up to that risk. For me, I'm very comfortable risking 5 points. 5 points is what I wanted to risk going into it. I knew at that point, pretty much when you are trading like this, there is no break even, there is no take profit. It's being comfortable with losing that money or making a lot of money in the most part. There's very few scenarios where I'm like wake up and I'm like around break even. The whole point of a trading style like this is to catch those big expansionary moves and really make a big chunk of money at once. And if you do have a take profit, for the most part, it might not happen sometimes. But when I wake up and I see them up 12K, I close out instantly. In a normal scenario though, you would find an area, a price level to trade off of to keep yourself kind of in check. This was the one time I've really had to kind of guess a stop loss, and that can be a big problem. I would highly recommend though, for the most part, again, this was the first time I ever had to kind of create my own stop loss, that you do trade off of the most recent high or low. Like in a scenario like this where you take shorts off of this candle, definitely exit at this area. You want to make sure your stop loss is in an important area. You're going to have to be risking more, but you should just factor in your position size before you get in the trade so you don't lose too much. It's my fault for not sizing down. That was risky of me. I will not lie, 100%. But doing this before, again, I've had $25,000, $16,000, $12,000, $20,000. I've had multiple $20,000 days doing this. Going on the dollar index, checking the 4 hour, checking the 1 hour high time frame. What is the bias on the dollar? What is the bias on the dollar? Looking at the dollar right now, what can it do to impact the price of gold going forward? Is it bullish? Is it bearish? 4 hours not giving anything? Okay, go on the 1 hour. And if you're day trading this, I would recommend using the 15-minute when, like when you're trading New York session, whatever. At that point, once you find a bias, once you see, hey, it's rejecting off of this supply zone, it's probably going to drop. Now let's go on gold with the mindset looking for longs. At that point, you're just auditing it. You're looking at the 4 hour, you're looking at the 1 hour, because we have to plan on holding this for multiple hours. If I'm going to have this trade overnight, it's going to be 12 hours. So we need to be basing our trades off the 4 and the 1 hour. All you should be doing going forward on gold now is looking and seeing if longs are plausible. If they are, take it. If not, you don't have to take it every single night. At that point, once we get the verification that longs look pretty solid, I'm willing to take a risk with this. Now we check the 4 hour, we check the 1 hour, we confirm ourselves. Then we go on the 15-minute. Gold is pretty trendy. Gold is pretty rangy. I don't like to enter, at highs and lows. I like to look at the EMA just for opportunities to buy in, just because it gives me a little bit more value. So I always like to look for a retracement first, and we got that here. Then we entered 5-point stop loss, ran it up. Do you see how simple this is and how much money you can make? Someone like this, I could take this one trade. I could be done for the week if I really wanted to. I'm not going to, but something like this is really more quality over quantity, and I think that's how it should be. I think you should prefer A+ setups over taking B and C setups, and it's very easy for your psychology. At the end of the day, you don't have to watch your trade. You don't have to freak out. If I was watching this, even me, okay, if I was watching this and I was up, to get to the point where you're up 12K, you got to be up $5 and $8 and $10,000. I probably would have scaled out, but put that thing away, went to bed, woke up, didn't have to work for today, that's for sure. I hope you guys are doing good though, man. I just want to say thank you guys for watching this video. Please make sure to subscribe, and you can join the Discord if you want below. I stream on Twitch as well, but I've been busy studying for this fucking Series 65. Hope you guys learned something. Comment anything you need help with. I'll let you know in the comments. I'll see you guys later. Go make some money.